please give me a favor, right? Don't be as that guy. Don't give off your t-shirt. Improvise as everyone on a fin tweet that is buying the dip. Its share is dropping, but they pretending nothing happened. So fake it till you make it, you may say. But if you want to know how to buy the dip and don't get destroyed, watch another episode of Blockrevision. I'm Rafał Leszek. Thank you very much for tuning in today. 8:45 East time. We are at the exact time. It's 45 minutes till market open, so it's great time to get some more knowledgeable and to find market occasions. So without a further ado, let's begin. So we'll jump into economy view. What we got out of the most interesting and most debated issue is this, that Elon is reviving a bid to buy Twitter for the original price of $54.2 a share, and he's about to make out of this platform and everything up. So for Twitter's users and the general public, we are back to square one. But maybe this time is different. Elon is announcing that kind of a brave idea of getting into an existence and everything up. What we may get understand by this phrase. So that might be a platform radically better than it was the Twitter solely a chat for or rather the platform for communication in the manner of shortened text messages about your status or the interest you are about. So the everything app might be a kind of a WeChat. WeChat is a fintech titan, one of the China's biggest payments and online finance networks. Users inside of it sending each other not only text messages or funny pictures, but also money, can pay for goods and services, and even borrow money. So it's very interesting how it may work out when Elon Musk heading into a new business. That's definitely something that put himself in a spotlight of everyone interested in a business and entrepreneurship around the world. So the first, however, for Elon Musk is how he would need to deal with something else. This very important element is how Musk will handle with Twitter's censorship. Will he let Donald Trump get back onto the platform just in time for the 2024 election? How he will deal with all these bots that are driving much of the traffic on the platform? That's the questions that are of very difficult answer, but you may attach those answers in the comment section below the video. So Elon Musk will be definitely the one of the personality, as always, to watch. End of an era for hedge fund. I mean the hedge fund of Bridgewater. So Ray is no longer having its final word in the company. He has transferred all of his voting rights to the board of directors and stepped down as one of the fund's three co-chief investment officers. So he entrusted its future and $150 billion in assets to, as I just attached, a younger generation of leaders with their own ideas about investing. So, needless to say, there was a bumpy road in Bridgewater's career that eventually is rebounding after years of struggle. In 2020, as a reminder, it has lost 12.6%, and it brought many institutional clients pulling their money. So Bridgewater Associates posted recently a 32% return for its flagship hedge fund through the first half of 2022, as it benefited from increased market volatility. So it's kind of consoling that eventually they make it out and regain its losing credibility in terms of high yield profiting hedge fund. So right now we can find that Mr. Dalio decided to step down after a winning streak, and I would say that's a good reputational step. But will this of truthfulness, this era of truthfulness and transparency, end up with Dalio stepping down, and will these elements will eventually fade away in terms of hedge funds future? I do find, as it wasn't the one CEO recently that Ray Dalio won or didn't even consider to live in its heritage to other personalities that may fall this company apart. The one thing, however, is certain: many will remember Dalio as the very one that has been on the forefront of many revolutionary ideas regarding investing and economy. And the thing is certain that value investing won't go away with stepping down any of prominent investors from its CEO's positions. So that's just another shift that will go throughout our lifetime of investing. Unfortunately, global PMIs, as we are heading right now to economic data, has slumped below 50-ish. Contraction era is finally here. We may start talking about the global recession from now on to start it. What makes things worse is that historical and concomitant debt, hence currency crisis in every corner of the globe, that with rising dollar getting more dicey. US as well as global middle class can thank Greenspan, Bernanke, Yellen, Powell for all the pain ahead, as it is the direct result of years of unprecedented drunken free money and bloated debt. However, if you are in Europe especially, you should be thankful to your domestic central bankers that were acting blindly in tandem after Fed. And what will they do when they be backed in the corner by this economic crisis? They will likely turn Japanese and sacrificing the value of its currency in order to stabilize the economy and eventually start dumping US treasuries in dollars to keep the lights on from Paris to Portugal. So it's gloomy times ahead. I don't really find that those quantitative tightening foretold by CBOE even start, as they right now on the brink of many disturbances. That's why those devaluation of the currency may only just have started. Printing as a way of living, that's what I mentioned. Right now the BOE has admitted that signed off on £100 billion of bond buying by quasi-quartering, and initially it's supposed to be just £65 billion, and you right now can see how dodgy this play might be of printing everything out. The fiscal drip is nowhere here from stopping. These closed systems of finance has been distorted by those irregular amount of money being printed out of left and right. And for the government, it's just another way to mask the problems that tend to pile up under the rug. Those problems piled up have a tendency to and will possibly go off at the most unexpected time, sweeping everything away. So we have entered a new phase of economy that is not about fixing, but about printing. Print economy is the new term for this devil structure that we've created. So it cannot be pushed into infinity. As the Rome, the great empire, collapsed by printing out money out of thin air, this era of finance will possibly end up very badly one day. Market outlook. So we are jumping into trading view. So right now let me just take a second. Alright, so we are on a SPX. We can find that this bear trap was really painful. Right now we are jumping out of this floor with a much of a impetus, and this is cutting off many shorts, as I mentioned already. On US 100, however, we have a correction today, as one of the possible reversal may take place and may take us lower to another low 1100s areas, so 11,000 areas. So after cutting off those shorts, I do expect that many indexes will have its turning point around this area. On forward chart, we can find that we are in a kind of a strong mode to the upside, but we have another much of a resistances been found around these levels. At the most, I do expect US 100 to get somewhere around those low 12,000 area, and right after get back to lower levels. We don't have found any type of reversal pattern aside from kind of engulf relation that may stop its further dropping, so it's chart from further dropping. That's why US 100 is right now in a reverse, but when it stops, it would be a great time to take position against it. So just observe it carefully right now. It's a bit too early. It's premature to say that we are on the way lower. Once again, right now, this trade was overcrowded with shorts. That's why we can find a rebound. All right, heading back to market outlook, or rather crypto outlook right now. On the crypto outlook, we can find that NFTs monthly volume has dropped 97% from 2022 highs, and those NFTs, non-fungible tokens, has been put in favor by many celebrities that just mainly turn away from this type of digital toys. Non-fungible tokens were rather than the fad than the useful tool to help the users in that or other way. So that couldn't really persist that type of difficult market conditions, and right now we are suffering major slumps. But there is another trend that is increasing in power, and that's the one that is very interesting, is this ENS, that is unstoppable domains that stems to as DNS, domain name services, that came to life when using the internet, Ethereum name services, becoming to get the similar usability, but those DNSs put on Ethereum network won't get stopped by any type of power unless anything happened to Ethereum network. And with blockchain, with those DNSs being assembled to blockchain network, we would find that any type of structures put on those domains and servers won't get reverted without a user's agreement. That's why it entails many of an interest of investors and also those types of guys that are running their websites and don't want to get stopped by any type of regulations or any type of other public force. So those ENSs are definitely the one thing that you should get interest in if you are running a website right now. It's still very early, as those websites might not work very fast, as Ethereum is on the way to its scale procedure, with sharding coming up within 2 years that may broaden its bandwidth. But right now those ENSs might be relatively cheap to definitely find it as a possible investment to the future. When buying the domain right now, you may put it into life within maybe next months or years, right after that become more usable. So that's ELON'S registrations that took off. Market mover section, that's always very interesting. This time we had already on Wednesday PMIs out of the Euro area, and we can find that Germany's PMIs has outstanding relative to what France is heading, and that stems literally from those energetic crisis that has hit Germany in a kind of a strong manner. Also, Euro area by large being battered by those problems we are right now facing. Another thing is that what those PMIs out of the US turn up, and what type of conclusions we may take out of it. That will get published at 10 a.m. East time. Tomorrow on Thursday we are looking for PMIs out of Canada, and the most interesting for Friday will be non-farm payrolls that everything is watching for. That is a major litmus paper of what's going on in the economy. As a reminder, that's more like a lagging indicator, but that's the one that is one of the favorite of Fed in order to adjust its fiscal policy. So right now we are jumping to our very interesting section, that is a trade idea and what we got out there. Let's have a look. So for me, proposition is today a gold to USD. Recently I've been stopped on this trade by this recent green candle that literally turned out to be that fast and that strong that has closed my shorts. And this gold to USD right now is in a very interesting spot, as we have bounced and crossed those resistance levels, resistance areas on a satisfactory high volume. Right now we are facing a kind of a type of reversal, but for the market the most interesting will be whether we'll get over those recent barrier of 1730s. So many of shorts been cut off, and with this one resurgence on the amount of over 6%, we are right now among the festering battle between bulls and bears. Which of them may win? My take is that that's rather improper to predict, rather react. In trading, you are not trying to pull back any type of thoughts that are boiling down to prediction and to predictive type of thoughts, and rather react instead of fantasizing what the outcome might be. So in a gold right now, with this one situation where right now I would just hold on for the conditions to clear out. I would like to have a look right now at commitment of traders for gold in order to verify what the sentiment really is right now. So we are going strictly to where is the gold? Where is the gold? So that's buried. You to USD. Alright, so commitment of traders is hidden out of this point. So let's have a look at what we got. What we got out of the commodities. So commitment of traders. I have as a top, and for gold right now we are getting to the position where commercials are about to get to the break even and increasing their positions accordingly to expectations that this gold may rise in price in the future. So they are starting to bet that the price of gold is getting more and more attracting. That's why I would be very cautious with shorts, but the price will be the latest decisive power. If we just manage to cross over this trend line, I would set my longs. Otherwise, if we just hang on in this area for at least 2-3 days, I would set up my shorts. So just to clarify this one for gold, if we manage to get over this area, I would set my trading area to those levels with those price objection to get hit at 18-19, and we will stop loss right below the week of this red recent candle. So a risk reward ratio in that type is 2.19, and otherwise, if we just won't manage to get across this type of line, I would have bet my gold in the other side, and that would look like this. So we can find that risk reward ratio to the downside is higher than to the upside. If you are not accepting the lower than 3.0 risk reward ratio level, you absolutely may consider to reject that proposition of me to trade to the upside. That's why I would prefer the gold to reject the level of the one that is stopped right now, but as I said, the market is the last one determining of where the price may go. So that's it in today's episode. Right now it's more like a sit and watch rather than have a rush in any type of asset. For me, gold spot to US dollar is the one the most interesting to watch right now, as we are at the inflection point in which the decision of the Mr. Market must be taken. Thank you very much. See you tomorrow, 8:45 East time.